Manager, Risk Management Department at the SEC. Mrs. Naomi Simpson, Senior Manager, Funds Management Department, SEC. And then James Skillifin, Communications and External Affairs Officer. I'm glad to say they've returned to the studio for another important conversation today. Ladies and gentlemen, thank you very much for joining me again today. I trust that you're well.
Yeah, we are doing well.
Thank you.
Thanks.
Fantastic. We're going to start off again because it's important that we continue to drum home the message in terms of securities. Sometimes when you say securities, people confuse it with protecting people, but investment, if to say for the layman to understand. And I'll start off with you again on the mandate of the Securities and Exchange Commission and what you do to protect investors from fraudulent activities.
Right. Thank you for having us, and good morning to your listeners. Yesterday I mentioned that the main mandate of the commission, or the object of the Securities and Exchange Commission, is to regulate, innovate, and promote the growth and development of an efficient, fair, and transparent securities market in which investors and the integrity of the securities market are protected. We do this through regulating and supervising the securities industry. We promote the development of the entities within the market. We protect investors through investor education and such programs. And then we ensure that the market participants themselves operate fairly. We also issue rules and policies to guard the operation of the entire market. We monitor the trading activities to ensure fair trading, and then we investigate more practices within the sector. We liaise with other security agencies and other regulators to ensure a fair financial sector.
And so those are the bits and pieces. But when anybody hears the capital market or the securities market, they are wondering in their minds how different it is from other financial markets that exist. What are the segments that exist within this capital market, for which reason people can seek to take advantage of?
Right. Thank you again. The capital market is a part of the entire financial system where companies can raise medium to long-term financial support for their businesses and their activities. It is also a place where financial instruments are sold to investors with capital or funds, excess funds that they hope to use in the long to medium term can invest. So we pull the excess saving units, people who have excess funds, and then we link them up with people with long-term financial needs, the deficit saving units, and bring them together on the capital market. So we have on the markets that we trade the stocks or the shares, we trade corporate bonds and government bonds. We have exchange traded funds, mutual funds that are listed and all that. So in a nutshell, that is what the capital market stands for, and it is just a portion of the entire financial system.
Just
you want to add
to
some,
make
James?
it like very practical. So for example, let's say a company want to expand their operations and they want to raise money. Right, so the capital market, since is a long-term arm of the financial sector. If you put your money in the bank, you can walk in there and take your money the next day. So if you put your money in the capital market, because you have this concept that I'm going to put my money to work for me for the longest term, that fund is called patience capital because it's going to be there for a very long time. A firm that needs money to undertake, let's say, a 10-year project can come into the capital market, take that fund that investors has brought in the market, use that money to expand their operation, because investors are not going to demand their money within that short period of time.
Absolutely.
So the company has enough room to put that fund to use and then return back interest or returns to the investor. That's why we call the capital market the long-term arm of the financial sector.
A long-term arm of the financial sector. I'll ask, how easily can people seek to take advantage of it? Because sometimes people hear and there's a feeling that it's a bit complex. Is it one that readily anybody can just, the banks, you can wake up every day, you walk into it. There's a distinguishing factor between what you do and what the regulators of the...
And then the investors. So I'll start from the companies. If you are a company and you tend to source for capital from the capital market, you look for licensed entities that would help you through the regulatory process, the issuing of capital. And it is easy because there are requirements. We've laid them down. These issuing entities would help you go through it. There are requirements depending on the level of company. So you would not have the same criteria for, let's say, a big company like MTN and then an SME. So they break the requirements down. They will take you through whatever product or document you are able to put together. Then you submit it to the Securities and Exchange Commission for review, vetting, until we approve it. Then you can go to the investing public. It is called an initial public offering.
IPOs.
Yes, IPOs. And then you offer it to the general public and you source for funds. The other hand is the investors. And so if you want to invest, if let's say MTN is issuing securities and you want to buy, you walk into any licensed broker, licensed investment advisor. They will take you through their KYC process. KYC is know your customer or know your client. And so they are supposed to set you up, give you forms to fill that will let them know who you are and what your investment objectives are, your attitude to risk. As he said, this is patient capital. And so if you intend to recoup the money in 3 months, you can't use that avenue. So they will take you through all the profiling process to know who you are, your tolerance level to risk and all that. And when they are able to set you up, then you can buy these investments.
And I just want us to stay on that bit about patient capital. Do we run a risk of a system where people are in quick need of return on investment, which doesn't allow for, which is what leads into the scams as well, which we'll get into. People are in an urgent demand of a return on their investment. Should the education be out there that, look, building wealth actually takes time if you're seeking to invest? Because that appears to be a gap where nobody ever really talks about, and everybody is mentioning how quickly it is that you can be able to get to put your money in something and get some return. Really,
rightfully observed. And so that is one of the reasons why we are here, propagating the gospel of investment, to let people understand that depending on your needs, your financial needs, there are some avenues you may not have to approach and there are others you can. And also we have licensed representatives who are supposed to take you through. That's what I called the client profiling process. And so they would assess your needs, your investment needs, who you are, your tolerance level to risk and all that, and be able to advise you before you put in your money. Long-term capital yields a lot of returns. There are risks there, but when you patiently wait, you are
a fixed deposit at a bank versus buying shares from a company or becoming a part owner of a company listed on the Ghana Stock Exchange.
Right.
Now your fixed deposit can return within 3 months, right? You could say that you could go in and say, even in a month time, you can go back and get your a certain return on it. But consider buying a share from a company. The company can only declare dividends at the end of the financial reporting year, which could be a year.
Right.
And sometimes they not even declare dividends at the end of the reporting year. So you see the difference. One can quickly return you funds. One would have to go long term. So if you want to build wealth for the long term, thinking about 5 years horizon and more, then you want to consider the capital market, which would take gradual process to return funds on your investment. versus the banking sector, or going after a quick scheme that promises you higher return may never return anything on your money.
Let's talk about corporates, because sometimes they are very successful in taking people's money away.
Okay, so generally, good morning to your listeners.
Yeah.
Generally, a fraudulent investment scheme is a program that is designed to deceive people into investing their funds based on false or misleading information. And so some information will be given to you, but it might not necessarily be the right information. Whatever information is given to you is meant to mislead you into putting your funds into something that will not yield you. It might yield you a quick return immediately.
In the initial stages.
Yes, in the initial stages. But ultimately, you stand at the point where you lose whatever it is you put into the investments.
And what are some of the key warning signs or red flags that investors should be on the lookout for? Because when you were explaining what the fraudulent investment schemes are, I had some bits and pieces from which I can glean and say, okay, this is a red flag.
Okay. So, one, the first thing you would see so far as a fraudulent investment scheme is concerned is the fact that they guarantee very high returns within a very short space of time. We have earlier on in our discussion indicated that it's important when you are putting your money into investments to be conscious of the fact that wealth takes time to build. So if you are approached by anybody offering an avenue for investment that guarantees a return within a short space of time, that is not realistic, then it means that is a red flag. The other thing you should also look at is the fact that the institutions and the people who are involved in fraudulent investment schemes normally do not have licenses. We have mentioned the fact that within our market, we issue licenses as part of what we do. We issue licenses to those who operate in the market.
Right.
And before we issue a license to you, we would look at a number of things. We would ensure that you are fit and proper to operate within the market. Yeah. So if you don't meet those requirements, you become a danger to the integrity of the market and to the investor as well.
Right.
And because of that, will not allow you to operate. Now, these fraudulent investment schemes normally do not hold licenses. So that is one of the red flags we should be looking out for when we are approached by people who or institutions who are giving us investment offerings. One other thing we should also look out for is the fact that they are normally anonymous. So the people behind the schemes normally don't reveal their identities. And the institutions involved they normally don't even tell you their locations.
Right.
And they tend to operate mostly online because they want to hide who they are. And the fact is that these investment schemes will ultimately bust. And they won't want you to know who they are so that you'll be able to follow them and trace them. Yes. So that is one of the things we should also look out for. And the fact that most of the time, the fraudulent investment schemes don't actually have the products they claim they have. And so they are giving you an offering. For some of them, they will approach you and ask you to put in an initial investment. And then they will ask that you recruit other people to join. And the funds that the new ones are bringing on board are the ones that will be used to pay the existing investors. That is why initially you get returns, which are very high. But when it comes to a point where they are not getting new investors on board to finance those who are already existing, then the system will bust and you find yourself wanting. And so it's important to look out for that as well. And sometimes these schemes they use celebrities and they give fake testimonials.
Right.
So you would see someone using a very popular person's picture to advertise a fraudulent investment scheme. Most of the time, these ones are not true. I think recently there was one that involved the president's brother, Ibrahim. Yes. And so you see somebody, he's a big man, he's a rich man. And if you consider the fact that he has come this far in terms of wealth, then you'll be deceived into thinking that if there's a scheme that has its name attached to it, then you can also be able to build wealth to that extent. But it doesn't work that way. So these are some of the things that we have to look out for when it comes to fraudulent investment schemes.
Right. Thank you very much. It's a very important point you make, and a number of the things that have come up. So how then do we identify the investments that are good for us?
To identify which investments are good for us, first you can approach any licensed broker dealer or investment advisor. First, go on our website. We have a list of
all the companies,
and even have shown their level in the system, so that you'll be able to take an informed decision. The other bit is that these entities are supposed to display their licenses in their offices, and so when you approach when they approach you or you approach them, always look out for whether they are licensed entities. Time and again, the Commission issues press releases and publications warning investors against some unscrupulous entities.
On that score, when you find out that a company is operating illegally, what are some of the steps you take?
Okay, so first, we issue a press release to warn the investing public.
To stay off them.
Yes. So the one that she mentioned, the one linked to the president's brother, you would find a press release on our website warning the investing public. If this is an entity that we can lay hands on, we issue a letter to them, warning letter to them. We liaise with the securities, law enforcement agencies, the police, the IOCOs, and other financial institutions to clamp down on these entities.
Right. Let's try and wrap up because there are quite a number of birthdays on our slates today. So we've spoken about how persons can get investment. You've mentioned the brokerages and what have you, amongst many other things. What will be the final message from each of you in terms of what we should be looking out for, most notably when you're going out there to seek investment?
Okay, so I'll start. I would say that if it is too good to be true, then it is what it is. It is too good to be true. So if you encounter anyone or anyone approaches you, is offering you so high a return, guaranteed returns, and the promises are so good to be true, know that it is probably a fraudulent scheme.
Absolutely.
And take action for yourself. Ask questions. Contact the Securities and Exchange Commission, give us tip-offs and all that, and we will take action on it. Thank you.
To add to that, I would ask that speak to professionals.
Right.
We have spoken about the fact that there are a number of institutions and individuals within the institutions who have been licensed because they have the qualification it takes to give advice so far as investments are concerned. So if you have any difficulty taking decisions around where to invest and all of that, please speak to professionals because there are professionals available. And when you are not sure, please speak to the SEC.
If you're not sure, please speak to the SEC. James, you finish for us?
So I would say that, as the popular saying goes, shortcuts are dangerous. Building wealth take time.
Yeah.
And so you must be very patient to put your money down gradually and earn at the end of the day. If you want to rush quickly to earn return and make quick money, you will end up falling victim.
You find yourself
to this investment scam. So the SEC is always committed to ensuring that we are protecting you, the investor, and regulating the market in a way that you can be confident enough to put your money to work for you in the capital market.
Ladies and gentlemen, I appreciate you coming because it's very important conversation, and it's important that we've had had this twice in this week. Education for everybody in terms of where you can put your money for it to grow and work for you. Lillian Dansuefum, Deputy Chief Manager, Risk Management Department, the Security and Exchange Commission. Naomi Simpson, Senior Manager, Funds Management Department, the SEC, and then James Kenefin, Communications and External Affairs Officer. I appreciate you coming, and thank you very much.
Thank you for having us.
For having us.
If you give me benzo, I'd give you long life.